Good afternoon, ladies and gentlemen. This is the final session and the final module, credit management. Two more products we are going to discuss today. Lending products. Now, mostly, you know that our lending products are there are different type of lending products we have in the organizations. We got asset-based finance. We got uh, asset-based. Then we have three types. Basically, non-asset based, that is finance based, where the cash goes out, and the lease financing and hire purchase. This comes under based on the asset based financing. Right. What is lease financing? In Sri Lanka, lease finance is governed by Lease Financing Act number 56 of 2000. This is the governing legislation in relation to finance leasing in Sri Lanka. So, leasing activities are governed in Sri Lanka under this act. Let's see what are these things, important features of this act. According to Section 2 of the Leasing Finance Act number 56 of 2000, no person shall carry on finance leasing business except under the authority of certificate of registration issued in that behalf under the provision in this act. Okay? So, but no person is authorized to do finance leasing without approval from the central bank. That's the authority. Section 3, a person shall not be eligible to register under this act while such a person is a licensed commercial bank or licensed specialized bank coming under Banking Act number 30 of 1988. That means all licensed commercial banks and licensed specialized banks are authorized to grant leasing facilities according to Section 3 of the Financial Leasing Act. Again, all finance companies within the meaning of the Finance Company Act number 78 of 1988 also eligible to enter the finance leasing business. Then a public company incorporated under Companies Act number 17 of 1982. Other than the finance companies and licensed commercial banks, a special company can be established under the Companies Act. Right? These are the requirements under the Leasing Finance Act to do the business of leasing financing. So, what is a lease? Finance lease is an agreement between lessor and lessee. The agreement between lessor and lessee for the possession and use by the lessee for an initial period no less than 1 year from the date of agreement of an equipment specified by the lessee and either provided by the lessor or a supplier selected by the lessee. Right? So very clear, this is the practice here happening. Any instrument, that means any equipment, any asset product can go for a lease. This is specifically for the vehicle. Any asset you can buy, you can get it under leasing. For possession and use, very important word. For the possession and use, to have it and to use it by the lessee. So lessee has authority to use the asset and keep it in his custody. For the initial not less than 1 year, minimum of 1 year should be there for the date of agreement. And it has to be either given by the lessor or a supply selected by lessee. So lessor what will do? Purchase from the supplier and given to the lessee. So lessor will purchase the instrument, the equipment, and given to lessee under this agreement for rental. Right? Section 43 defines finance lease mean an agreement between lessor and lessee for the possession used by lessee for initial period not less than 1 year, lessee and lessor. That is under Section 43 also it is specified what is a finance lease. Payment by the lessee to the lessor for a possession and use such equipment of such sum to be calculated as so take into account In particular, the amortization of the whole or substantial part of the cost of the equipment. Right? A very important concept is this. The payment we call rental. The rental should be calculated. The amortized is full amount, substantial part of the cost of the equipment. Right? Cost of the equipment has to be taken into consideration by the way of depreciation. It will be worked out by the way of depreciation, amortized fully. And which after acceptance of the equipment by the lessee is not terminable by lessee during the initial period set out in paragraph A. That means after acceptance for a 1 year period of 1 year, you cannot cancel this leasing agreement. It should be more than 1 year. Paragraph A, it should be clearly mentioned. Initial period of 1 year. So 1 year, you cannot cancel the lease agreement or it's not terminable. Which, though not hire purchase agreement within the meaning of Consumer Credit Act 29 of 1982, may or may not provide for extension of initial period set out in the paragraph A for the purchase by the lessee of the equipment after expiration of the initial period set out in the paragraph or period extended under this paragraph. Right? This is authorized the lessor according to lessee's request, extend the period more than 1 year. The initial period is 1 year according to the Act. Or the period extended under this paragraph. That means it can be extended. Right? For the purchase of the equipment after expiration of the initial period is set up. Yeah, clearly understand this sentence. Or for the purchase by the lessee. Lessee can purchase the equipment after expiration of the initial period, after 1 year or after extended period. The lessee can purchase the item. So this is very, very careful to understand. Mostly this product is misunderstood by the lenders as well as the customers. Lenders as well as the customers. Is clearly indicating the Act section 43 that the agreement can be extended after 1 year for a further period with agreement of both the parties, and also lessee can purchase the equipment after 1 year or expiration of 1 year or the period which has been extended. Okay, can be extended. Okay, so this is very important factor we can understand the purchases. The purchase mean, what is that? Basically, therefore, if you interpret this section 43 of the Financial Lease Act, it clearly indicates it is given for a period to be used by the lessee for a payment. The payment is called as rental. Payment we call as rental. This is a loan installment. It is a rental. This rental has to be paid for the agreed period till the fully set off. Right? And end of the period, lessee can ask the lessor to sell the equipment to the lessee. That means lessee will purchase. Lessee will purchase. It means no automatic transfer of the ownership at end of the lease period. This has to be clearly understood. In the lease agreement, it is not transferring the lessee at any time because a rental agreement. So basically, finance lease is a rental agreement. It's an internal agreement. Right? When you come to hire purchase, it's a different. It's different from the hire purchase. Okay. Under section, registered establishment is special purpose vehicle deemed to be a lending institution. According to the Act, section 5 of 24/2005, the amendment, this agreement, every registered establishment and every special purpose vehicle shall be deemed to be a lending institution. Now, I said earlier, according to section 43, lease is a rental agreement. Lease is a rental agreement. Therefore, it is not a lending. It is not a loan. It's not a loan. So consider as a debt. Not consider debt. But Amendment Act number 5 of 24, Amendment Act 24 of 2005, section 5 says, is deemed to be a lending institution for the purpose of reporting the credit information with equipment. Within the meaning for the purpose of Credit Information Bureau of Sri Lanka Act number 18 of 1990. That means lease also has to be registered as a debt. Accordingly, although it is not a debt, it's not a loan, it has to be registered at the PIP as a the institute need to be a debt. Right? So clear understanding, it's not debt, it's a rental agreement. Right. Let's see definition of a lease. A lease is an agreement whereby lessor conveys to the lessee in return for a payment or series of payment, right to use an asset for an agreed period. Right to use the asset for an agreed period, not to for the possession. Right? What are the types of leases and basics? The lease is a contractual agreement between lessor and lessee. It's a contract. It is governed by the law of contract. Law of contract. It's a contractual agreement between lessor and the lessee. The agreement establishes that a lessee has the right to use an asset and in return must make a periodic payment to the lessor. That's called rental. The agreement to pay a rental to use the asset. The lessor is either asset manufacturer or independent leasing company. Lessor is either manufacturer of the asset or very different company, right? Or the company is doing the leasing. The lease is usually a non-cancelable agreement in which the lessor conveys the right to use the property, plant or equipment, usually for a stated period of time to the lessee. It's very, very important. It is a non-cancelable agreement. Financial lease cannot be cancelled in between. It cannot be cancelled. Fully amortized. Section 19 I'll give you there. It has to be paid in full, in other words. It's a non-cancelable agreement. Where lessee is called the user of the property asset. Lessor is the person who owner is the property. So lessor is the owner of the property. Lessor is the owner of the property. Therefore, clearly understand this ownership. In practice, although registered under the lessee's name, lessee becomes the legal owner according to the Motor Traffic Act. Lessor have the absolute title over the property. He's the owner, but his ownership is given to lessee to register under his name, lessee's name, and lessor holds the title of the instrument in the lessor's hand. That's called absolute ownership. So title will not be passed unless giving a letter that is there so further interest in this lease. The declaration has to be given. Lessee and lessor, uh, operating lease, there are the two types of leases we are going to talk about, operating lease and capital lease. Lessor is the use of the property. Lessee is the use of the property in operating lease and capital lease. Lessor is all of the property in operating lease as well as capital lease, that is direct financing or sale type lease. Lessor is all, right? Lessor is the all of the property, operating leases as well as capital leases or financial leases. Conceptual nature of the lease, the issue of how to report the lease is in case of substance versus forms. Lessee, use of the property, lessor, all of the property. Although a technically legal title may not pass, the benefit from the use of the property do. Technically, legal title may not pass to the lessee, but benefit for use is given there. That's a concept nature of this lease. So, what are the advantages in leasing? Saves cash, no money down. In any lending is proportion, any lending proportion, it is compulsory to the borrower to make a contribution to the requirement. That means the share should be borne by the customer. In other words, 100% will not finance under any lending agreement. But in leasing, you can go for 100%. And it's not needed to make an advance. Normally, we do different way. We'll take in the what you call upright payment as down payment. There are 2 installment or 3 installment it will be taken in advance, which will be set off and then the final payment. But there's no, according to what you call law or practice, no down payment can be obtained. Usually longer term available resulting in lower monthly payment. Longer the period, lower the installment. It will help the customers to maintain their cash flow. Right? Lease is a product which helps the customer to manage the cash flow. In a loan, it is given as payment and it will be conveyed into P&L as an expenditure. Whereas a leasing rental is not considered as an expenditure, it can be adjusted for a tax purpose. We'll discuss later. Tax benefits such as faster write-off, more rapid amortization than possible with depreciation. Right? So the tax benefits can be obtained for the lessor as well as lessee. Lessor getting the what you call capital gains, but the lessee gets the rental gains. Rental is considered as a part of an expenditure and it will not be considered for payment of tax. Okay, so it will not consider for tax. Whereas the loan installment, only the interest will be benefit for tax purposes, whereas the capital recovery will not be considered for tax purposes. So there's a benefit for leasing in the tax calculation. Provides cost cutting for profit making equipment to be installed immediately. So it is very rapid and fast. Cost cutting of profit making equipment to be installed immediately can be installed. What other advantages? Permit alternative use of funds. Leasing arrangement provides the company from the use of control and asset without incurring huge capital expenditure. That means the company will necessarily have to incur a cost on fixed asset under leasing. They can get no rental and pay the rental, not the capital amount. Okay. Faster and cheaper method. Acquisition of assets under leasing agreement is cheap and faster than any other source of finance. So that means there's no what do you call assess or the credit evaluation like in loans. The leasing credit evaluation is very minimal, only see with the customer having the repayment ability. That's all. Nothing else. Okay. Flexibility, leasing arrangement may be tailored to the lessee's needs more easily than ordinary financing. The lessee can utilize more funds for working capital needs. When the lease rentals is worked out, the funds are the capital without the money invest should be invested in the capital, fixed capital, fixing what you call fixed asset can be used for working capital. We know that more working capital is can generate more profits. Okay, so lease is an advantage because of that. Facilitate additional borrowings. Leasing may incur long-term ability to acquire funds. The lease can utilize more funds for working capital needs. Right? That means it's a long-term finance can be obtained under lease, which can be so that the amount can be used for working capital financing for day-to-day needs of the business to improve the business. Protection against the uh, obsolescence. The firm can avoid risk of obsolescence by entering into operating lease agreement. There are different other type of agreement called operating lease. So if the asset is taken and that asset is not utilized for the business purpose, it is become obsolescence. If it become obsolescence, create unnecessary expenditure. Therefore, lessee can arrange for ask for a different leasing product called operating lease. We'll discuss in detail what are the operating lease later, and that will be can be used for only the time of use for the venture. After that, you can return back the asset. Short-term usage. Okay. No restrictive covenants. The restrictive covenants which are usually imposed under debenture or loan agreement are absolutely absent in the leasing. That's the conditions. And certain conditions are there. The restrictive conditions are not there. Unlike loan agreement. 100% financing. Mentioned earlier also. Lease finance can the firm to acquire the use of an asset without paying a single cent as down payment. So 100% financing is assured to the lessee. 100% finance can be taken. Boom to uh, boom to a small firm. This is a boom to small firms and technocrats who are able to make promoters contributing as required by the financial institutions. Small companies, they can utilize their capital resources very carefully by using this method. Pays an equipment out of before tax savings rather than after tax profit. That means before tax, that's part of a expenditure, financial expenditure, which is considered in the profit and loss account. Leverage leaves normal lines of bank credit undisturbed. When you take a leasing arrangement, it will not show as a borrowing. Therefore, the ratio of borrowing to the equity, leverage ratio, will becoming a positive side. Right? Avoid alternate corporate minimum tax. The corporate tax on the profit can be reduced using the advantage in PC. May increase the company's ability to acquire funds, thus does not dilute ownership. That means without assigning the assets of the company to a third party, can acquire funds that can improve your funds. Creates or maintains working capital for inventory, account receivable, and expenses. So permanent working capital requirement can be fulfilled by using advanced leasing. Why the customer should go for leasing? There are good reasons as well as bad reasons. The good reasons are taxes may be reduced by leasing. The tax payable can be reduced by leasing rental. The entire amount lease rental is tax adjustable. Full amount it can be utilized for tax reduction. The lease contract may reduce certain types of uncertainty. Right? Uncertainty of finance can be reduced. Transaction costs can be higher for buying an asset and finance it in debt or equity than the leasing of asset. So the transaction cost in leasing is very, very less. Now, that means if you're taking a loan, mortgaging, the asset has to be mortgaged to the bank, so you have incur cost like valuation, and incur cost on the mortgage bond, and incur cost on stamp duty, you can incur cost on the legal charges. Transaction cost is very high if you borrow under mortgage. In the leasing agreement, there's nothing, no transaction very much less. Okay. The bad reasons are leasing and accounting income. Leasing and accounting income. That income is shown as an offshore item. Leasing income as an onshore, on the book items of balance sheet item and 100% financing. The lease can be, we discussed the definition, the finance lease and operating lease. There are two types of lease operating in the business. What are types of leases in the market? Financial lease, very commonly we are using that. Operating lease, leverage lease, cross-border lease. Cross-border leases are vendor leasing, wet and dry lease. Now, very commonly we know these three items: financial lease, operating lease, and leverage lease. What are cross-border lease? Cross-border leases are across the countries. Vendor leasing as well as wet and dry lease. What is wet and dry lease? Normally you get this term in aircraft leasing. In aircraft leasing, that can be used with or without the crew. Right? Wet leasing is with the crew, dry leasing is without the crew. If a company want to hire a machinery on lease, if the operators and as well as the maintainers with that entire set will be going to lease, it's called a wet lease. If you take only the machinery and use your staff to use, that's called dry lease. Okay, so it can apply according to circumstances. Let us see what is the operating lease. An operating lease is also known as a service lease, short-term lease, or true lease. There are three words used for this operating lease. It can be used as a service lease. Normally, service suppliers leased out for services is called a service lease. The short-term lease, normal operating lease is a short-term lease, and also true lease, right? The lease is for a limited period, maybe in a month, 6 months, or year, or few years. Short period. Right? Normally, lease rentals will be higher as compared to the other leases in account of short period of primary lease. Operating lease, normal rentals were very high because according to operating methodology. Right? Now, what is operating lease? Now, if a company wants to hire a company starting a venture, normally comes under ventures, a venture, a certain equipment is needed but they don't want to purchase and they don't want for longer period. They need only for the initial short term to use for that particular period. So that is there, the operating lease is getting used. For example, a contractor want to do certain, need certain machinery, heavy equipment machinery. So he can, on the lease, he can get this machinery for a period of 3 months, 1 month, 2 months, 3 months period. Right? On the expiry of third month, he will be returning back the equipment to the owner. Right? So its liability is over. So no one has to find another person to lease it out. Therefore, there are really intermediate cost is very high. So cover up that cost in operating lease, the rental will be very high. Okay. Right. What's the difference between operating lease and finance lease? Lease is finance is a transfer substantially all the risk and rewards incident to ownership. Right? Transfer substantially all the risk and rewards incident to ownership. Ownership will be remaining with the lessor and it can be transferred risk and rewards to use and all the risk, maintaining risk, uh, any damages, repairs, all these things transfer to lessee. Whereas the operating lease, and operating lease if it does not transfer substantially all the risk and rewards to the owner. It is borne by the lessor. What are the risks? Incident to ownership. Right? Risks are losses from the idle capacity. That is, if the machine can produce certain amount, the lesser amount produced, the idle capacity, that risk has to be borne by the ownership. That is the lessee. Technological obsolescence, it has to be borne by the lessee. Changes the value due to changing economic conditions. If the equipment value is changed, that risk also has to be borne by the lessor. What are the rewards? Expectation of services protection of particular operation over assess economic life. Right? Within the economic life period, the maximum can be utilized. Gain from appreciation value. If the asset value changes, appreciate, that benefit he gets. Realization of residual value. Residual value means scrap value. Set. If substantially all the risk and rewards incident ownership are transferred from the lessor to lessee, is a finance lease. What we discussed in the area, risk and rewards, which are transferred to lessee, it is called a finance lease. The lessee should recognize finance leases as assets and liabilities in the balance sheet at amounts equally inception of the lease to the fair value of the lease property, or if lower, the present value of the minimum lease payment. Okay, the lessee should recognize that the lessee has to show the lease arrangement in their balance sheet. Okay, the lessor should recognize asset under the finance lease, its balance sheet, and present it the receivability amount equal to the net investment lease. So lessor's books, what it shows, the net value. Net value means the whatever rental received will be adjusted for the amount given, and the net balance will be shown on the balance sheet. If substantially all the risk and rewards are incident ownership are not transferred from the lessor to lessee, it is an operating lease. I told you earlier. These are transferred to lessee, it is operating lease. The financial assets remain on the lessor's balance sheet, and lease payments should be recognized as the income statement. So it is showing as an asset in the lessor's books, not the lessee's books. Okay. No mathematical thresholds are used to determine whether the lease should be classified as finance or an operating lease. An overall analysis of the transaction needs to be performed at reception of the contract to determine whether substantially all the risks and rewards are transferred to lessor to lessee. Overall analysis needs to be performed at reception of the contract to determine whether it is going to transfer rewards to the lessee or held with the lessor. Transferring lessee is a financial lease, holding with the lessor is an operating lease. Operating leases are usually not fully amortized. That means the entire amount will not need to be amortized. This means that the payment required to under the terms of this lease are not enough to recover the full cost of the asset for the lessor. In financial lease, it has to be fully amortized. That means full value, full rental value has to be recovered. I told earlier, as for partial payment, as well as there's no in-between cancellation. Section 43 clearly indicates that of that. But in the operating lease, although the lessee taken the equipment for a period, for example, period of 3 years, within 1 year he can return back, cancel the lease agreement and return back, which cannot do an in a financial lease, only in operating lease. So operating lease, in other words, can be cancelled and in between before the period ends and can return back the asset to the lessor. That's why the higher rental is charged. You should require lessor to maintain and insure the assets. So because ownership with the lessor has to maintain insurance, everything has to be made by the lessor. Lessee enjoys the cancellation option. This is what I told. This option gives the lessee the right to cancel the lease contract before expiration of the deed. Lessee has the right to cancel any time before expiry of the lease agreement. So that is operating lease. Now, when we discussing for a customer's need, depending on the customer's need, we have to give the product. Therefore, we should know what is the operating lease, what is financial lease. Most commonly, we use financial leases. The Act also provides for financial leases, right? Not for the operating lease. So, operating leases, separate instrument, a separate type of a facility. Depending on the customer, if the customer need is for a short term, it is better to give an operating lease than giving a finance lease. If you give a finance lease, what will happen? Customer may get, he had to pay fully amortized and he may becoming a loss for him. That operation may not be profitable for him. Okay. The exact opposite of an operating lease. Financial lease is a opposite of an operating lease. Does not provide for maintenance for service by the lessor. Financial lease to be maintained, service, everything should be done by the lessee who is going to use. Financial lease are fully amortized. Cannot be paid in halfway. Full amount has to be paid. All the rentals has to be paid. The lessee usually has the right to renew the lease at expiry. Right to renew the lease at expiry can renew for further period. That option is there. Before the expiry, it can be extended for another further period for the further lease. Okay. Generally, financial leases cannot be cancelled. That is, the lease must make all payments in the face of the risk or bankruptcy. This is the biggest risk we are facing. In other words, it is not in other words, the lease rental is for use. Okay? Lease rental is for using of that asset. Possession and use of asset. If the person does not own that asset, it cannot return back. Whether he utilized or not that asset, he had to pay the rental. Even not utilize the asset, he had to pay the rental. Now, this is very important thing to understand. This is how most of the finance companies leasing companies make huge profits. If the customer does not pay in between, the full amount has to be paid by the lessee. So lessee loses the asset as well as its money. That's a disadvantage. That's the disadvantage in the financial lease. So selecting a financial lease operating which is beneficial to the customer. Firstly, identify the business purpose behind the lease and economic impact together with the economic issues at the end of lease term. Right? Cancellation provisions. For cancellation provision. Right. Just see what purpose the customer obtaining this lease. Is for a short term, go for a cooperative lease. If it is for a long term, go for a finance lease. Determining the lessee and the lease term, including extension that are reasonably certain will take place. The renewal option, whether it can be renewed or not. Determine the net present value of the minimum lease payment, including payment that are reasonably certain to be made. When you're going to renew, normally the institution works out for NPV, net present value. That's the today's value of the asset and calculate that for any extension. Coincide whether substantially all the risk and rewards are being transferred from lessor to lessee to the financial lease. Right? Rights and obligation at the end of the lease. At the end of the lease, it's an asset has to be returned back. Okay. Examples of situation which should normally lead to lease being classified as finance lease. The lessor transfers ownership of the asset to the lessee at the end of the lease term. Very careful understand. Don't go alone by this sentence. Right? This is section. I will give the section. The lessor transfers the ownership of the lessor transfers the ownership. Lessor has to transfer the ownership of the asset to the lessee at the end of the lease term. It means it is not automatically transferred. Right? Go along with the second para. The lessee has the option to purchase at a price. Ownership and transfer when lessee has the option to purchase the asset. Lessee has to purchase the asset. That means it is not automatically transferred. Lessee has to purchase it, which is expected to be significantly lower than the fair value at the date of the option because it becomes exercisable such that the inception of the lease, it is reasonably certain the option will be exercised bargain or purchase option. So that's what in all the documents, you get a document signed by the customer for this purpose. That he will be purchased at a residual value. When it is fully amortized, book value of the asset will be nil at the lessor's books. Although the asset is there under lessor's name, so lessor has the right either to sell or not the asset, or determine the price of selling price. Although the fully amortized, the market price is very high, so lessor can ask for a market price from the lessee if you want to purchase. Right? So lessee may accept or may not accept. This is the mode of operandi of this lease product. Examples of term which would normally lead to lease being classified as finance lease continue. The lease term is for a major part of the economic life of the asset, even the title is not transferred. Although ownership vested with the lessor, the asset's lifetime, majority part is already absorbed, right, in the lease agreement. For example, if you take an asset, economic lifespan is 5 years. Normally, motor vehicles are The windows are giving the certificate, lifespan is 5 years. Right? After 5 years, the lifespan is over. Life of asset is over. But even the transfer title is with the lessor, right? And the value has been already depreciated. During the economic life period, the value has been depreciated. So by the end of the period, book value will be zero, or the scrap value. The lease assets are specialized nature such that only the lessee can use them without major modification being made. Without any modification, they can use it. The lease asset cannot be easily replaced. It cannot be replaced. You take a one, and you have to use the same thing till the end of the period. At the inception of the lease, the present value of the minimum lease payment (MLP) amounts to at least substantially all the fair value of the asset of lease. So when you're calculating the rental, what are the components of the rental? Financial lease or operating lease. How the rentals are calculated? Right? The capital investment, like called investment, to purchase asset investment. That investment will be divided by life period. That will be depreciation. Okay, during a period which was a life period 5 years, so it can be divided by 60, and you can get a monthly depreciation of that asset plus interest for the investment. Interest for the investment can be charged. In addition to that, according to the government policies, the VAT has to be added. And there are three components. Right? There are three components in the lease rental: depreciation, interest, VAT. There's no loan amortization. Depreciation is the installment. Wording is right? So, minimum lease payment, rental lease payment decide on that basis. Other indicators which individually or in combination could also be lead to lease being classified as finance lease. Okay? If the lease can be cancelled, like the lessee can cancel lease, the lessor's losses associated with the cancellation are covered by the lessee. These are most of the, I told you earlier, the lessors, that is, the finance companies are earning from them. They can charge the cancellation, if it can be cancelled in advance, all the costs can be recovered. That is, cancellation are borne by the lessee. All the losses. The lessee bears the gains, losses, or the changes in the fair value of the residue. Right? That means if the value has been increased, it is a gain. Value decrease is a loss. Market value decreases, a loss. The lessee has the ability to continue the lease for a secondary period at a rate which is substantially lower than the market rate. The lessee can the right to release the same asset can be leased give back and get in, the can be leased can be extended. Okay. Right. Now, what are the types of this is basically two types of leases what we discussed. The financial lease and operating lease. Right? So what is a financial lease? What's operating lease? What are the benefits of financial lease? What are the benefits of operating lease? What are the advantages in financial lease? What are the advantages of operating lease? What are the disadvantages in financial lease? What are the disadvantages? Okay. Okay. Let's go the different types of lease agreement. This is sale and leaseback method. The particular time is fine. Now you may have seen most of the leasing companies are advertising. Right? කල්බත්ත කරගෙන ඔබගේ වාහනයක් මුදලයි දෙකම අරගෙන යන්න පුළුවන්. This is very but the customers must understand the modus operandi very carefully in this method. A particular type of finance is right. Now occurs when a company sells an asset it already owes to another firm and immediately leases from its company. There are two sets of cash flows. Lessee receives cash today from the sale. The lessee agreed to make a periodic lease payment, thereby retain the use of the asset. Now, for example, a person have a vehicle. Now I'll give this example. Several examples, a case. Actually, what happened for one of the customers. It's a customer who's importing shoes, right? Shoes from China. And he got 3 containers, bought shoes from China, which was retained at the RTF. The customs definitely because normally these guys have in the business the invoices are undervalued to pay lesser taxes. So this was retained by the RTF. And he had to pay 1.5 million penalty plus the other charges. It went about 1.5 million. So immediately he didn't have money. So this businessman went round to find out from the banks, friends, to immediately get some money. So one of his friends gave an idea that he had a Toyota Alliant car, sometime long time before, high value, Toyota Alliant car. So one of his friends suggested, why can't you give this vehicle for a company, leasing company, and get some money? He got the idea, went to a leasing company. So leasing company will heavily take them, no? So what he did was, even the vehicle was against the vehicle, not against, right? Use the wrong word. Keep the vehicle, and the leasing company gave 1.5 million, and then arrange for a lease, payable in 3 years, and is under income. So he came back, right? 1.5 million cash in hand, within own vehicle, even driving homes. These are called sale and lease back method. Sale and lease back. After some time, about 3 months later, what happened? This person could not sell the consignment due to the season was over. By the time we have got the containers released, so he could not sell, and his cash flow was deteriorated. He could not pay the rental, and 3 rentals were on due. The lease company repossessed the vehicle. And sold it for 2.5 million. 2.5 million. And the company gained a profit of 1.1 million on that transaction. Now, so this person went and asked for the excess money which have been sold and got the money. Company refused to give. He filed action against the company. He filed the action against the company. What was decided in the courts? What decided? There are 2 transactions taken place. The first transaction, the customer sold his vehicle to the leasing company. Leasing company purchased the vehicle. Customer sold the vehicle and got the value. So that is the value of 1.5 million he got by selling of the vehicle. These are the lease finance. By selling of the asset, only got is 1.5. Now the ownership has transferred to leasing company. The leasing company used the vehicle on rent to him to use for a rental. That's the second transaction. Therefore, court decided he had no right. You already decided to sell. Hold on. Market value of the vehicle was about 3.5 million. You sold for 1.5 million, that is your business. That has nothing to do with court cannot do anything about your sales agreement. Let's see a seriousness. Therefore, we have to be very alert when the customers comes asking for something. Information has to be given very clearly. Carefully tell. This is for the product, this is how it operates, and this is what will happen. Okay? So therefore, he lost the asset, he lost his money, everything he lost. So sale and lease back is when your urgency, finance needed, sometime we will get it again. Because sale and lease back में installment ගෙවාගෙන බැරි වුණොත් වාහනෙත් නෑ සල්ලිත් නෑ. It's very important. Right. The other one is the leverage lease. Second type, the fourth type of lease is leverage lease. Financial lease, operating lease, sale and lease back method. The fourth one is leverage lease. Leverage leases are another type of financial lease. The three-sided arrangement between the lessee, lessor, and the lenders. But leverage is a party sumak involved. The lessor owns the asset and for fee allows the lessee to use the asset. Okay, lessor owns the asset and for a fee he lease out the asset to the lessee. So lessee will take in asset like financial lease, he take in the asset for lease. The lessor borrows to partially to finance asset. So lessor will borrow from another party to do this transaction. The lenders typically use non-recourse loan. This means that the lessor is not obliged to the lender in case of default by the lessee. So the transaction between lessor and the lender, then that means lessor will borrow from another company to give this money. For example, he said company A is the lessor. Lessor will give the asset to use to B for a rental. Okay. The lessor again borrow fully or partially from that asset from another party. It's a non-recourse loan. So the lessor has to pay back the loan as and when the lessee pays the rental. Set off with the rental. That's called leverage leases. The leverage leases are normally used because the leasing company is not a finance company. The leasing company is not a finance company. Then to get the capital, use this type of transactions. Because according to law, leasing companies cannot mobilize deposits. According to law, leasing companies cannot mobilize deposits for the customers. They have to borrow in different instruments, either selling an instrument or what you call an instrument called debentures or borrow from a finance company. That's why always you would have seen finance, lease and finance both goes together. Finance companies, lease and finance both goes together. Finance companies independently they can do leasing. Leasing companies can do leasing but get the finance, they'll go through finance company. Right? So the legal structure is that. Right. Now very important fact we'll go through the operational sides of the transaction. Return of the equipment. Section 15 of the Lease Finances Act. Upon expiration of the period of the finance lease or its prior termination under this Act, the lessee shall return the equipment to the lessor. Lessee shall return the equipment to the lessor on the expiration of the period. On the expiration of the period, lessee has to return back the asset to the lessor. In such conditions specified in the paragraph C of the section 12, unless the lessee had acquired the right to purchase the equipment or retain it for a further period. If the lessee want to purchase, he can retain the asset. Or he can retain the asset if the lessee want to extend the lease term for another period. Otherwise, it has to be returned back on the expiration of the period. Now, very clearly understand, this is most of the bankers, financiers have misunderstood that, like any other instrument, when the period is over, the full amount is amortized, the asset has to be given to the lessee. No, not at all. There's no provision in the Act to give that. Because the ownership still with the lessor. Ownership still with the lessor. Because the transaction is a rental agreement. Asset has been taken by the lessee for rental for a period. Once the period is over, rental period is over, can the ownership be transferred to the lessee? No, there's no legal provision for that. So don't misunderstand this concept. Mostly our financiers have misunderstanding mixed with other products. Mortgage or hire purchase. Those two are different type of products. Lease is a different product. So the lessor has to purchase at a residual value or a nominal value. Lessor will sell that. Again, keep in mind, lessor can deny the sale. If the lessee asks for that asset, lessor may put a price. If the lessee is not agreeable with the price, he can argue that I have paid so much to give me the no, he can't. Because the ownership still with the lessee. Where the lessee fails to return the equipment, the lessor shall have the right to recover the possession of the same. After expiry of the asset, if the lessee had not been taken back the asset, then lessor have the right to repossess the asset, although fully amortized. So seize කරන්නේ lease එකේදී නොගියොත් විතරක් නෙවෙයි. ගෙවල ඉවර වුණත් seize කරන්න පුළුවන්. Okay. Can you understand? Okay. Right. Now let's go for the defaults. When you defaulted, how to deal with that? Where lessee fails to comply with certain terms and conditions of the finance lease, in such circumstances as would amount to a substantial failure of such lease, the lessor may, subject to the provisions of Section 21, require the lessee to make an accelerated payment of the monies due under this lease, where the lessee provides or Section 28 lessee install rental එක ගෙවන්න පැහැර හරියොත් comply with the certain terms and conditions of the financial lease. Under such circumstances, as to amount to substantial failure in the case, such lease, the lessor may, subject to the provisions of Section 21, require the lessee to make accelerated payment. Okay? For future interest, demand pay back all the interest which is not due to be fallen in the future. Right? And where a lessee fails to make an accelerated payment as required under the paragraph A, terminate the financial lease. If the conditions have been violated and the payments have not been paid in time, as it gone arrears, lessor has the right to terminate the financial lease, even one rental is in due. If one rental is due, lessor has the right to terminate the financial lease and recover the possession of the equipment, repossess the asset, and recover such damages had to place the lessor in possession the lessor would have been if the lease had been complied with the provision of the finance lease in accordance with the terms and conditions. Serious positioning में है. Repossess कराने पासे ये क्या recover such damages, damages की नहीं verify करना होता. Asset එක අත්තර ගන්නවා, future rental එක damages ඇතුළේ ගන්නවා. Rental එක lease එක දුන්න asset එක පාවිච්චි කරන්න rental එක යුම නැත්නම් asset එක repossess කරනවා. Repossess කරන මදිවට අර future rental එකත් ගෙවන්නේ කියලා කියනවා. පාවිච්චි නොකරපු period එක rental එකක් ගෙවන්නේ. අසාධාරණයි. But provisions are given that. Act එකේ කියලා function කියලා කියනවා. ඒ නිසා තමයි lease product එක carefully understood. කිසිම අවස්ථාවක in between cancellation එක කරන එක පාඩුයි. full amount එක ගෙවල ඉවර නැග ඉන්න ඕන. අතරමඟ ගෙවනවා නම් ඒක පාඩුයි. Okay. But some companies are, finance companies are, have their own ways of doing, but according to law, this is what provisions are given in the Act. Companies වල පුළුවන් මීටර කන්ට්‍රෝල් මීටර සාධාරණ විදිහට කරන්න පුළුවන්. කන්ජස්ට් එක කරන්න පුළුවන්. But according to law, that is the provision. Section 38. Every registered establishment and special purpose we discuss for the purpose of reporting the key report leasing of lease debt otherwise lease is not a debt. Right. Finally, after we were removed, right. Non-disclosure of information. The director or any officer authorized by the director shall not disclose any information or matter acquired to the discharge of duties under this Act, except when required to do so. Information या disclose करने का Section 37 है prohibited. Normally, you know, all financial institutions under Banking Act of 1988 also discloses there, and Tony versus National Provincial Bank case also decided the financial institutions cannot divulge any information of the customer to the third party. So it applies to leasing also. So under lease, Financial Act Section 37 will define when required to do so. Right? Except when required to do so by court of law. Can disclose. By person to whom such information or matter relates. Right? යම්සි පුද්ගලයෙකුට යම්සි සිද්ධියක් සම්බන්ධයෙන් අවශ්‍ය නම් මේක දෙන්න පුළුවන් with the consent of the customer. In the performance of the duties under this Act or in order to comply with any other provision of the Act or any other law. Right? Bank or finance company එකට පුළුවන් disclose කරන්න performance of the duties. අවශ්‍යතාවය අනුව. ඒක මොකක්ද කියලා පැහැදිලි කරලා. For example, lessee defaulted the rental, so lessor can give an order to seizures to take repossessed asset. So that means third party had disclosed that that person had paid. That is performance duties. Make entry in the police. Performance of duties. Okay, right. So that's all about lease finance. Mostly we do the leasing and leasing business, and leasing business is very lucrative because I just mentioned about this is a case. In the case of a default, lessor can repossess the asset and sell and get the value of the asset, as well as to recover the um, unmatured rentals as damages. Right? So that's why most of the finance companies are now flourishing, because if the customer defaulted, it's a benefit to them, it's an advantage to them. Because they can resell the asset as well as they recover the rental payments. Okay, right. Shall we break for a little? Come back little later. Okay. Next product is similar product to lease finance is high purchase financing. Let's discuss what is high purchase, what's the difference between high purchase and the leasing, what are the similar products. Okay. A system by which buyer pays for a thing in a regular installments while enjoying use of it. During the repayment period, ownership title of the item does not pass to the buyer. Upon full payment of the loan, the title passes to buyer. Okay, now see the major differences between lease and then hire purchase. Most of the products features are same, but the structure and definitions, legal background are different. Now here a system by which a buyer, you use the word buyer. The leasing, it is not buyer, it's a lessee, right? It's a lessee, pays for a thing, pays for a thing. They are not paying in regular installment while enjoying the use of it. Both instances enjoying, using it. The leasing also, lessee to see the use, to pay a regular installment. It's not called installment, it is the rental. In the hire purchase, it is installment. Why? It is a loan. Upon full payment of the loan. Mentioned here clearly. It is loan. So hire purchase is a loan. And loan given by the hire purchaser to the hire purchasee to pay the installment while using the asset. While using the asset. During the repayment period, ownership title of the item does not pass to the buyer. So the ownership will be remaining with the seller till the full settlement. The full settlement, and it passes the ownership to the buyer, which is not happening in the lease. The lease agreement, after making full payment, even ownership will, the title will be with the lessor, not passes to the lessee. Lessee has to purchase it from lessor, then only with the sales agreement, it will be transferred. Okay, The difference we have to clearly understand. Hire purchase a financing solution suitable for businesses wishing to purchase asset without paying the full value immediately. Purchase asset. Now, in the hire purchase, the businesses can purchase an asset, right, without paying immediately on a credit basis. Hire purchase is a credit finance, where customer purchase asset and the value of the purchase will be paid in installment in the future, right? Not paying immediately. Although the ownership is with the the hire purchaser or the seller, buyer has a right to use the asset while paying the installment. Okay. The customer pays an initial deposit with the remainder balance of interest paid over a period of time. Right? We compare with this lease agreement. In the lease agreement, we said you don't have to pay a deposit. 100% lease can be given. Whereas a hire purchase, right? The rental, the customer has to pay a deposit, a certain percentage of the value of the asset. And balance will be with the interest on an installment basis over a period of time has to be paid back. Right? On completion, ownership of the asset transfers to the customer, buyer. On completion, ownership of the asset transferred to the customer, automatically transferred. Right? Sales proceed has been paid in full. Right? Sales proceed are paid in full. That's different. And lease finance. So lease finance is governed by two different acts. The main act is called Consumer Credit Act number 29 of 1982. Right? Consumer Credit Act number 29 of 1982. An act to define and regulate the duties of parties to hire purchase agreements and to provide for matters connected therewith or incidental thereto. The Consumer Credit Act, the definition of the act says, define and regulate the duties of the party. What are the duties and responsibilities? How to regulate it, how to monitor, how to do legalize it, which is given the Consumer Credit Act. Okay, to matters connected therewith and incidental thereto. All the matters connected to the hire purchase are governed under Consumer Credit Act. Again, there's another act called Understanding the Elements of Under Formalities of the Sale of Goods. Contracts of sale of goods are governed by the Sale of Goods Ordinance number 11 of 1896 and its amendments. Contracts governing to sale, we discussed a little while ago, in hire purchase, is a sale. It's a sale of an asset on credit basis, not immediate cash. So there it can be sale, it can be immediate cash sale or credit sales. Hire purchase is a credit sale. Therefore, it is governed by the law of contract of the contract of the sale of goods ordinance. Provision of sale of goods ordinance applies to hire purchase contracts. Section 58.2 provides that subject to the express provision of the ordinance, the rules of English law will be applied to the sale of goods, except where English law is inconsistent to express provision of the ordinance. So, sales this contract of sales or ordinance, where it's governed by the English law, and therefore the law of contract will apply to sale of goods ordinance. Section 2.1 defines the sale of goods as follows. Sale of goods It's a contract by which the seller transfer or agrees to transfer the property in goods to the buyer for a money consideration called the price. The property in goods means ownership of the goods or the title of the goods. Seller transfer or agrees to transfer. Seller transfer immediately on cash. He paid immediately money. Seller will be transferred the ownership immediately to the buyer. If you go to shop and buy something, you pay for the counter. Counter cashier will give you the item to you. Then your ownership will be transferred there. Other one is agrees to transfer. Right? You buy something and say you pay later. It's a credit sale. So agree to transfer the goods for the money. Immediate transfer, cash, agreed to transfer on contract. Right? On a contract, in sales of goods or goods. The buyer for money consideration called the price. The property goods means ownership of the title of the goods. So the goods mean ownership of the goods or title of the goods. There should be an immediate transfer of property in goods ownership or an agreement to transfer the property good ownership in future. So this section 4 says, clarifying the position, immediate transfer of property, goods ownership, that is a payment of cash. So payment is not paid immediately and agreed to pay on installment or subsequent date, then you transfer it, is called agreement transfer. The sale and agreement to sale. Sale and agreement to sale. As per section 2.3, it has defined there. When the property and goods are passed from the seller to buyer, the contract is called a sale. When the property and goods passes in the future from the seller to buyer, the contract is called an agreement to sale. The agreement to sale becomes sale when the time elapses or the conditions when which the property in the goods is to be transferred fully. The agreement of sale will be completed the moment either time lapses, period given that lapses, or the full amount is settled. Right? All the conditions have to be fulfilled. That's how the sales agreement is implemented. When the hirer pays the purchaser's installment, hirer pays purchase in installment. So not immediately paying. This is an advantage here. You see? The cash flow will not be affected on the business. Although the asset is being the property books showing as an asset, where asset value is showing as a payable. It's a liability. So, and purchase price paying by installment, by thereby gradually ownership will be coming to the hands of the purchaser. All installments and other monies payable by the hirer to the owner under the agreement shall have been fully paid. Hirer pays the purchase installment and all installment and other monies payable the hire to the owner under this agreement shall have been duly paid. And provided that the hirer shall not have committed any breach of these terms and conditions of the agreement and pay the purchase installment. The title to the goods will be passed to the hirer. Procedure is when you purchase an asset, like you don't have to pay immediately, arrange a hire purchase agreement. With the hire purchase, pay the full amount to the purchasers in installment. They pay in installment. The end of the payment of installment, automatically the ownership will be transferred. Right? Ownership will be automatically transferred. That's what it says. Installment, then the title of the goods will be passed to the hirer. Consumer Credit Act, Section 20, there are certain very important factors in the Consumer Credit Act. Restriction on owner the right to recover the possession of the goods otherwise than through quotes. Owner, how the owner? Seller. Restriction seller. Possession ගන්න බෑ. උසාවිනියෝගෙන් හැර මෙන්න මේ අවස්ථාවල. Right? Lease agreement, this is different. Even one installment differs, one installment delayed, leasing company has the right to repossess the asset. Whereas the Consumer Credit Act does do a different approach. Section 20 says, where a goods have been let or agreed to be sold under the hire purchase agreement, and 75% of the hire purchase price has been paid, whether in pursuance of a judgment or otherwise, or tendered by or on behalf of the hirer or any guarantor before the lawful termination of the contract. Owner shall not enforce any right to recover possession of the goods from their hirer otherwise than by court action. Very clear. Hire purchase pricing value you get 75% given if you paid in 75% of the hire purchase value without a court order, you can do a repossession. Compared to that, in the lease agreement, even one installment defaulted, this has the right to repossess. Right? And we have a hirer, any guarantor lawful termination of the contract, the owner shall not enforce any right to recover possession of the goods from the hirer otherwise than by action, by a court order. This is a very, very important condition in hire purchase. Okay? If the owner recovers the goods in contravention of the foregoing subsection, the hire purchase agreement, if not previously terminated, shall terminate, and the hirer shall be released from all liability under the agreement and shall be entitled to recover from the owner in an action of all sums paid him by under the agreement or under any security given by him in respect of agreement, and any guarantor shall be entitled to recover from the owner in an action all sums paid by him under the contract to guarantee or under any security given by him in respect of that contract. Okay, right. Now, section 20 very clearly says, if the owner recovers the goods, that is the seller repossesses the goods or the assets in contravention of the foregoing subsection. Now, if the customer pays 75% of the purchase value, that's what says, after that, the hire purchase and the owner, that is the seller, right to repossess the asset, right? And if not progress, they shall terminate. Terminated in that earlier, and it has to be terminated, and hirer shall be released from all liability under this agreement. So the hirer will not be responsible for thereafter for any payments under this agreement. So what is the original? We are comparing with the lease. Lease agreement, after repossession only, also this is liable to pay all the dues as well as the future rentals. Liability will not be released, even though asset is repossessed. Right? But in a hire purchase, shall enter recover the owner of the action, all sums paid him under the agreement, under any security given by him, respect of the agreement. In hire purchase, he is entitled to recover from the owner, the seller, all sums paid him under the agreement. The amount paid by him under the agreement as loan installment can be recovered. That's the beauty of this act. Any guarantor also, if I recovered from any amount from the guarantor, Even guarantor has the right to claim from the money which has been deducted from him on the company. So the hire purchase agreement will be more beneficial to the buyer, lease agreement more beneficial for the lessor. Difference between these two can compare. Right? The foregoing provisions of this section shall not apply in any case in which hire has determined of agreement by virtue of any right vested by him. So, any case in which hire has determined of the agreement. Agreement violate करती बोला hire, बिना इतिहास में कोई नहीं. Okay, एक अंदर का नहीं. Hire if defaulted the agreement, then you have no right to revoke everything. Right. Consumer Credit Tax, Section 7, right of the hirer to purchase at any time with a rebate. The hirer may at any time during the continuance of the hire purchase agreement and after giving owner not less than 14 days notice in writing of his intention so that not complete the purchase of goods by paying tendering the owner the hire purchase price or balance thereof as a reduced by the rebate calculated in manner provided by the subsection. That means in a hire purchase agreement, Section 7 says, consider that hirer, that's a buyer, can any time to cancel the hire purchase agreement and purchase the asset. Anytime asset can be purchased. Now this benefit is not there in the lease agreement. We discussed lease agreement cannot be cancelled in between. It should be fully amortized. While hire purchase, since it's a loan, the balance loan payable has to be settled by the buyer and get the right to purchase the asset. So we had to just the notice before, 14 days before, and complete settle the outstanding balance. Right? Outstanding balance, which you have to understand. In the lease, full lease rental has to be paid. That is the cost of depreciation, interest, as well as VAT. All has to be paid. But here, you have to pay only the balance outstanding. And also can claim a rebate. If you paid in advance, you can claim a rebate also under this act. Okay. The rebate of shall be equal to 2/3 of an amount which bears the hire purchase charges the same proportion of the balance of the hire purchase price not yet due bears to higher purchase price. Okay. The difference between the purchase price and the amount payable with the installment, the difference will be as a rebate bank can get it. Equal to 2/3 of an amount bears on the hire purchase charges same proportion to the balance. 2/3. The provisions of this section shall have effect notwithstanding anything to contain in the hire purchase agreement, but where the terms of agreement entitle the hirer to rebate higher than that allowed by this section, the hirer shall be entitled to the rebate provided by the agreement. So, in the agreement, what is the rebate is mentioned, that rebate can be claimed. Even seller can decide a high amount of rebate in addition to the rebate given in the agreement. Rights of the owner to terminate hire purchase agreement for defaults in payment of hire or unauthorized act or breach of express condition. Section 18 of the Consumer Credit Act. Section 18 of the Consumer Credit Act says right of the owner to terminate the hire purchase for defaulting payment hire or unauthorized act or breach of express condition. Now the owner, as hirer, have the right cancel, terminate the hire purchase agreement if the buyer, right, does any default, unauthorized act or breach of condition. Breach of condition has a right to terminate the hire purchase agreement and try to recover the facility. Where a hirer makes more than one default in the payment of hire as provided in the hire purchase agreement is subject to the provision of the section 21 after giving hire a notice in writing protest that 1 week case where the hire is payable weekly or lesser interval, 2 weeks in case in other case. Right? If the hirer makes more than one default repayment, then provision of section 21, hirer will give a notice, 2 weeks notice, 14 days. It's a monthly payment, right? It's 14 days notice to be given. If the hirer does any act regard to the goods to which the hire purchase agreement relates, which is inconsistent with any of the terms of the agreement. If the hirer does any act contrary to the inconsistent with the hire purchase agreement, right? Now, for example, hire we are taken as a policy asset. He cannot resell the asset without informing the seller. He cannot give somebody else for a rental or for use for somebody else. He can't give. And he violates the contract. So the seller has the right to repossess the asset at any time. Breaks any express condition of the agreement which provides that any breach of thereof, owner will terminate the agreement immediately. Owner can terminate the agreement and recall the asset immediately in the breach of any terms or condition of the agreement. Okay, right. Let us see what are the salient features in hire purchase. Likewise, leasing, the possession of the goods. Asset can be kept under purchaser's custody. Each installment is treated as a high charges. Okay, so earlier we called this as rentals. This also we call as high purchase rentals, hiring charges. Loan installment we are not calling a loan installment. This is hiring charges. Ownership with the seller till settlement, full settlement of the agreement terms. After settlement, automatically ownership will be transferred to the purchaser. Buyer. Any default in the payment, right? The 75% installment has been paid, then the agreement cannot be terminated by the seller. Seller has to seek the remedy from the courts to get the balance 25%. Default in the payment, especially. Terminate the agreement. Agreement can be terminated. The agreement can be terminated only after the cancellation of sales. Okay. What are the advantages of hire purchase? Spread the cost of finance. Financing costs can be spread over a period of time. For example, hire purchase is for, say, 36 months. So the cost of the asset can be spread out for 36 months. So in the balance sheet, what it shows, not the book value, not the face value. This is the amount how much you have paid up to now as an asset. So there's an advantage in that, right? The advantage in that is that the customer, the seller's assets showing lesser amount, not the actual amount. Only the outstanding balance will be shown there. Therefore, what is receivable amount is showing there. So this is the full asset. So it will improve the asset turnover ratio of the seller. Interest-free credit. Interest-free credit. Hire purchase is a purchase where the credit, interest-free credit, you have to just say interest involved, right? So the hire purchase, there's no interest. Hire purchase, there's no interest. High acceptance rates, right? Certain percentage, we said only percentage can be given, not 100%. So higher rate can be negotiated. In the sales, right? Sales take place with the sales with the buyer and seller, the contract. Contract for sale will be implemented, right? That will be considered as a sale. Although we call as a loan, the hire purchase agreement is called as a sale. Then it's a debt solution. Debt solution means whenever customer wants for financial crisis, this instrument can be used as a solution for debts. Okay. What are the disadvantages? It's personal debt. Normally, high purchases are mostly applied for a consumer credit. Therefore, it's a personal debt. Till the final payment, ownership will not be transferred. What are bad credits? What are bad credits? High purchase, right? High purchase, that is deferred payment. It's not considered as a credit. A credit is a deferred payment of sales proceeds. Paid harassment, right? If they're paid in time, can be harassed. Repossession right comes before 75% of the repayment. After 75% of the repayment of the full value, no repossession rights. What is best for your business? Lease versus buy. I purchase or lease. Which is best solution for you? Let us discuss. Comparison of buying and selling. We'll compare. There are many distinct differences between buying and leasing, regardless of if such a transaction or agreement applies to property, machinery, equipment, or any other assets. So the leasing and hire purchase can be applied for any asset. Can be fixed asset or revolving asset. We normally call this as asset, fixed assets or current assets. Revolving assets are current assets. Can be applied for anything. The differences lies on that the lease is conceptually very similar to the principle of borrowing. Lease conceptually very similar to the principles of borrowing. The owner of the leased property is not transferred under the terms of the lease agreement. Ownership is not transferred on the lease agreement. Whereas the hire purchase is transfers. Purchasing, on the other hand, involves an agreement that outlines the terms under which the purchaser acquires the ownership of the desired item. property or asset. The purchases, for the purchasing. Okay, the other part is not missing. Not there. Purchasing, on the other hand, involves an agreement that outlines the terms under which the purchaser acquires the ownership of the desired property. Right? The difference lies that as lease is conceptually very similar to the principles of borrowing. The owner of the lease property is not transferred under the terms of the lease agreement. Purchasing, on the other hand, involves an agreement that outlines the terms under which the purchaser acquires the ownership of the desired property. Okay. So what are the differences between these two? Let us see. Lease and buy. The responsibility is key factor. Repossessibility. In purchase of repossessibility for equipment falls solely on the shoulders of the business owner. Right? Repossessing of the asset, so the responsibility falls on the owner. Owner is the seller. Ultimate responsibility for the life of the equipment after purchase is complete falls on the buyer. Now you can repossess by the buyer after complete the payment. In case of purchase of full value of the asset, the transfer to the purchaser as a new owner. The leasing, case of purchase full value, asset transfer to purchaser as a new owner. The lease, the lessee has no claim to the asset upon the conclusion of the lease cannot be in part or whole improved with the resale of the asset. Discussed earlier also this one. You need to consider these two: responsibility, the responsibility key factor in the purchase, high purchase, responsibility equipment is the owner. Lease agreement, it's with the buyer. Then we come to resale value. The case of purchase of full value asset, automatically transferred to the purchaser as a new owner. In the lease agreement, it will not be transferred. It will not be transferred, and as a resale, it has to be purchased by the lessee. Depreciation is the major consideration for individuals deciding between the buying and selling. Depreciation is a major consideration individuals deciding buying and leasing. Right? The major factor. Right? In the business, there are exits. A basic rule of thumb: if it's appreciate, buy it. If it depreciate, lease it. When the asset value is going to be appreciate, you buy now. It's advantageous. If the asset value will depreciate, go for a lease. Because when you are paying in future date, you are paying more. That's why it says. So depreciation is the major consideration for that over a period of time. If the depreciation revalue increases, what we call not depreciation, appreciation of the value, then best thing is to go for a lease. Maintenance. Instead of lease, ultimate ownership is retained by the lessor. It is lessor's best interest to maintain the asset with best working model. So it has to be maintained by the lessor. Right? Right? It has to maintain the asset in the best working model. Maintain the asset is a responsibility for the ownership related with the lessee. So lessor has to see whether maintenance has been done. Now, contractually, normally what we do, lessor will be transferring this position to the as a condition to the lessee to do. When you take in the cost, compared with the cost, okay, in the event of the purchase, the full value of the asset must be paid to the seller. Right? In hire purchase, full value to be paid. In the event of a lease, however, only portion of the full value assessed to be a replacement, however, figure A varies based on the duration of type of lease. As wholly, the lessor could be granted the use of an asset and that could otherwise be cost prohibitive. Cost, when you get hire purchase, cost is less because only interest has to be paid. In the hire purchase, in the case of lease, interest, in addition interest, the VAT has to be paid. So cost is very high in lease agreement. Hire purchase cost is very low. Only paying the installment plus the interest. And also the interest is calculated from the outstanding balance for as normal debt in the hire purchase, whereas the lease, the interest will be the flat rate from the first installment to the last installment, the same amount of interest will be charged. Taking consider this factor. Now you, a customer, get an asset of his vehicle, the lease value is 1 million. Right? So you say installment is 25,000, which including of the depreciation, interest for the investment, and the depreciation, and the depreciation in value and the VAT. The first installment also 25,000. Last is, for example, given for 1 year, which is 3 years, 36 months. The first installment also 25,000 and the 36 installment also same amount of 25,000. By 20th, 21st, 22nd installment is due, the book value of the asset may be very, 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 very less because already depreciated and amortized. So he paying higher interest to the outstanding balance. So the interest is calculated on the very first installment. It's applied for all the entire period. So it's a disadvantage. The leasing rental is disadvantage. Whereas hire purchase will charge interest only for the outstanding balance. Disadvantage. Okay? So which part you are going to take? Hire purchase or leasing? Which is benefit? The leasing, hire purchase, we try to compare these two. Right? The comparison. In lease, ownership lies with the lessor. So lessor, the lessee has the right to use the equipment and does not have any option to purchase. So ownership is with the lessor. In hire purchase, the hirer has the option to purchase. The hirer becomes the owner, the asset equipment immediately after the last installment is paid. In the lease agreement, it don't happens. Right? Last installment paid automatically, hire purchase, the loan agreement ceases, then the ownership automatically passes to the hirer. The lease agreement is not a loan, it's a rental agreement. When the full amount is paid, the agreement is getting terminated. That's all. Asset will be transferred. Leasing is a method of financing business asset only. Hire purchase method of financing both business assets and consumer articles. Mostly hire purchase applies on consumer durables. Especially in Sri Lanka, hire purchase started in Singa Sri Lanka giving Singa machines on installment basis. Something about, I think, 40 years back, or more than that, 50 years back, hire purchase used in Sri Lanka. Okay, leasing came into Sri Lanka in 1980s. Only. Regarding the depreciations, in leasing, depreciation and investment allowance cannot be claimed by the lessor. Depreciation investment allowance cannot be claimed by the lessor. Lessor can take the advantage of the depreciation. In hyper depreciation and investment allowance can be claimed by the hirer. Investment and depreciation can be taken account as a claim by the hirer. Tax benefits. The entire lease rental is tax deductible expense. That's why I said the benefit for leasing is another benefit is the tax benefit. Most of the business people go for lease due to this tax benefit. The entire rental is exempted from tax. So they don't have to pay taxes for this income. Only interest component of the hire purchase installment are tax deductible. Any loan, hire purchase loan, therefore, tax deductible only the interest component, not the capital amount. No benefit from that. Then, residual value or the salvage value. The lessee not being the owner of the asset and does not enjoy the salvage value of the assets. Lessor is the owner of the asset, so after making the full payment, the salvage value is for the lessor. Normally, lessor sells to the lessee to recover the salvage value in the transfer of asset. The hirer in purchase being owner of the asset and the salvage value of the assets. In hire purchase, owner is the purchasee, so therefore he is entitled to use that what you call salvage value. In a deposit, the leasing, there's no deposit, initial payment or deposit, so a payment is not needed. It's not mandatory or compulsory. Based on the finance companies, they may apply this upright payment. Whereas the hire purchase, at least 20% they will make a deposit. Only 80% will be given as credit in the hire purchase. The rent purchase, leasing, the lease take asset on a rent basis. Lessee takes the asset on a rental basis. Hire purchase, asset purchased by the buyer. It's a purchase. Lease financing is invariably 100% financing. It does require an immediate down payment or margin money by the lessee. In hire purchase, the margin required 20-25% of the cost of the asset to be paid to the hirer. Right? So, in hire purchase, the hirer, that is the buyer, has to make a contribution for the cost. That's about 20-25% normally. Maintaining of leasing, the lease has a responsibility for the lessee. Servicing, repairs, insurance, all the costs are related to that is to be borne by the lessee. In hire purchase, also the hirer has to pay it. Owner is company, hire has to pay it because he's using for it. It's because he's using that. Extend the finance, lease finance is Indian 100% finance, that's a requirement with the okay. Right. Maintenance of the in the reporting. The lease assets are shown by the way of footnote only. Lease assets and lease assets are not shown in the books. It's a footnote or we call off balance sheet item. So off balance sheet item. Hire purchase, assets hire purchase shown in the balance sheet as a purchase of asset. When you list out, ownership is not transferred. Therefore, you can't show in the assets. Therefore, the transaction is shown off balance sheet. But hire purchase is a short-term credit. Therefore, it has to be shown in the balance sheet. Okay. So that's all about the hire purchase transactions. Let me summarize what we discussed up to now. Basic factors when we compare these two together with another product, similar product is a mortgage, asset mortgage. The both three products are nature is similar. Some asset is involved in the transaction. Some asset is on the back of a transaction. So we compare these three common factors and uncommon factors. Let's start with the legal position. Okay, now we discussed lease agreement governed by Finance Lease Act number 20 of 56 of 2000. Financial Lease Act 56 of 2000. Hire purchase governed by Consumer Credit Act number 26 of 2008. Mortgage is governed by Mortgage Act 1942, so 1946. So three different legal backgrounds. Secondly, type of transaction. Lease agreement is a rental agreement. Renting out the asset. It's a rental agreement. It's not a loan. But hire purchase is a deferred sales agreement. Hire purchase is a deferred sales agreement. Mortgage is a loan. It's a lending transaction. Product is similar, the nature is different. Okay. Least important factor is the financial lease. The full amount has to be amortized. That means there's no part payment or immediate in between cancellation of a financial lease. Only operating lease can be cancelled in between. Right? If a person wants to get rid of the lease, he has to pay the full amount for the unmatured period also. Whereas hire purchase, he can settle the outstanding balance at any time and release the asset. Transfer the ownership of asset immediately. In the lease agreement, even though he settles the full amount, ownership will not transfer. Hire purchase, ownership will automatically transfer. Mortgage also same. When you pay back the loan, you can settle in between the loan, full amount pay and you can get the asset released. Right? Similarly, hire purchase, you can get the asset released. Whereas in the lease agreement, although you settle the full amount, still ownership with the lessor. It will not transfer. It will not transfer. In the mortgage, there's no need of to transfer because the mortgage already titled with the mortgagor. So mortgagee, title is the mortgagee. Only the title document of mortgage bond will be cancelled, then automatically ownership will be vested. Lease agreement should be fully amortized. If any one installment defaulted at any time, the lessor can repossess the asset. Hire purchase agreement is a deferred sales agreement where if 75% of the value has been paid, seller has no right to repossess without going to courts. In the mortgage, also same. If there is a default, either you have to go to courts or you have to use the Parrot rule, the Parrot methodology to recover the loans. Right? What else? Comparison. Okay. So that's all about basically these three products. So this is the final session. Thank you very much for not participating and wish you all the best and good luck in the future. And I will wind up the session now. Okay.